Hi, everyone. Are you unsure about what a fund is and how it works? Well, we do a dive into the fun and the world of funds just after this. Hi, everyone. I'm Jonathan with Carolina Capital. This is the Passive Accredited Investor Show. And if you, I guess, well, we are a lender in the Southeast. So if you are a borrower, go to carolinahardmoney.com and click on the borrower tab. We'd love to talk to you about some lending opportunities. If you are an accredited investor and you would like passive returns, go to carolinahardmoney.com and click on the investor tab. Don't forget to subscribe, like, share, hit the bell, all those fun things that you get to do and I know very little about. And, other than that, don't forget about Wednesdays with Wendy. Wendy is gracious enough to give up one day a week, 30 minutes per person, to talk about all things that are real estate. If you have any questions or thoughts, anything that you want to do that's real estate related, it would behoove you to book a time with her and talk that through with her. And then let's see, what else do we have here? We have a wonderful guest, a friend of mine, Heather Dreves from Secured Investment Corp. We are going to talk about funds. It's going to be fun, I promise. Let's bring Heather out.
Well, thank you for having me, Jonathan.
Absolutely. It's my pleasure. How have you been? What's going on?
Things are good. I mean, we're located up in North Idaho, so this is a beautiful time of year where we're from. We have really beautiful fall seasons, but the sad thing is we all know what's right around the corner. So we'll probably have snow in late October, early November. So we all try to get in the last bit of late summer, early fall that we can, but things are good. We're super busy, within our company, and we've got a lot of exciting things going on. We're really starting to scale and grow. So that's really exciting, especially when it comes to the correlation with the funds. And that's, what you and I are going to talk more about today, but that's always beneficial to our funds when, everything's firing on all cylinders. That's how our funds make money. And that's how we're able to give our investors the yields that they've learned to expect.
Yep. Well, before we dive into the funds, what are you seeing in your markets now? I know you all lend pretty much nationally, right?
Yeah, we diversify our funds, meaning that 75% of our fund balances is held in loans that we originate, and those are nationwide. And then the other 25% of the fund balance is actually held in real estate assets, but that's only in our local markets. So that's specifically Spokane, Washington, and Coeur d'Alene, Idaho. And
those aren't hot areas right now,
they're terrible. I tell people it's terrible here, but people keep moving. Nobody's listening. We say we have bears and lots of bugs.
Oh yeah, that's great. So, can you tell me a little bit about and tell the viewers here a little bit about you? You've been doing this for a while, but I'd love to hear your story real quick.
Yeah. Well, I mean, I kind of got lucky enough to fall into this industry by chance. I got into this industry, over 18, 19 years ago, really starting from the ground up as a loan officer's assistant. I worked in the escrow department, assisted a licensed closer, service notes. At one time held my securities license because we were selling our paper, the liens or the trust deeds. And then got into the fund management side of things 10 years ago. So it was this natural progression. Really just knew somebody in the industry. All I really knew about a mortgage was that I had one, but quickly realized that there was just so much opportunity, whether it was from the investor side of things and working with clients, or myself and my family that are looking to passively invest, or working with the clients that were more the passive side where they were, or the active side where they were actually going out, finding the real estate deals, looking for funding to help finish up their projects. So just really enjoy the opportunity to really help both sides be successful and create wealth for themselves.
Absolutely. Yeah. I actually had a conversation with someone this morning who asked me, they're like, how did you get into this? And, same thing as you. It's like, we just fell into it. You fall into something, you're handed an opportunity, and you're actually pretty good at it.
Yeah, so it was eye-opening. I had no idea that this world was out there. And I don't think a lot of people do. I think it's more commonly, known about now because, so many people like yourself are putting on podcasts, self-directed IRA custodians are talking about it. But, 15 years ago, I had never even heard of it. I didn't even know there was private money out there. So I'm excited that it's out there and people are talking about it and understanding that it's a good option outside of your more traditional investment opportunities.
For sure. Yeah. Most of my family still thinks I'm a real estate agent.
My immediate family knows what I do, but I literally had my brother-in-law this summer come into town, and now I've been married 25 years. I've known him he goes, "What exactly do you do?" I said,
yeah.
Really, you're asking me that now?
Yeah. I had one of my aunts, asked me, well, this particular market, what do you think? What do you think I can list the house for? And all this. I'm like, I don't know. I'm not a real estate agent in that market. I'm not a real estate agent at all.
So funny.
Oh yeah.
I get the same thing.
Yeah. So I know that your all's Reg-A plus fund is fairly new. Am I mistaken in that?
No, it is new. That is correct. It's just a little over a couple years old. And, to kind of back up the time clock, when I came on board here 10 years ago, I had previously worked for another private money lender and dealt with investor relations, mainly selling paper, selling trust deeds. And so when I came on board, that was really the business model, right? We had all these borrowers and real estate investors that had great deals. They needed funding. I knew a lot of investors that like to passively invest in paper or trust deeds or notes. And so we would partner them, right? We would get the deal through underwriting. I'd start dialing for dollars is what I called it, which you've probably done. And it's clunky. And, on one side of it, you got a broker and a borrower breathing down your neck because they're ready to close. And then on the other side of it, you're trying to herd cats and get this investor that's, verbally committed to it. And maybe they're using IRA funds and it takes time to move it around. So we started exploring the option to open a fund. And at the time, the only type of fund you could open was a 506 C fund, which was for accredited investors only. And we have a fund that does that, and it's a great fund. But we always, as a team, felt like we were doing a disservice to everybody. Like, we didn't feel it was right for only high net worth, wealthy people to be able to have that opportunity to invest and get great yields. And so when securities laws changed, 4 years back, and the Regulation A opportunity, came available, we decided to jump all over it. And I will tell you, our Regulation A fund is a lot more work to manage than our accredited investor fund, but we feel a sense of satisfaction and feel like we're providing a really good opportunity to all these investors out there that aren't necessarily accredited. Now, not to say that I have accredited investors into that fund. Some high net worth individuals don't want to prove that they're accredited, and maybe they don't have the minimum, so there's all these different reasons. So 3 years ago, we started going through the process, and it's a pretty lengthy process. It takes about a year, and it's very expensive to open up a Regulation A fund. And so we jumped in with both feet and opened up what we call the Circle of Wealth Fund 3.
Okay. Yeah. Wow. So we have a question here from Glenn. He's asking, can you explain the difference between a Reg-A fund and the other types? So besides accepting accredited or non-accredited investors, are there other differences?
Well, with our funds, the accredited investor fund is technically an exempt fund because you're only allowing high net worth individuals. We make them prove that they are an accredited investor, and they have to qualify one of two ways. They can either qualify having $1 million in assets, excluding their primary residence, or they can qualify through their income. So if it's through their income, it's $200,000 a year as an individual for the past 2 consecutive years, or 300 as a married couple. Outside of that, the Regulation A fund, or Regulation A plus fund, I should say, you don't have to prove that you're accredited, but the maximum you can invest. So they do cap it because the Securities and Exchange is looking out for people that are non-accredited. Is they say that the maximum that one individual can invest is either going to be 10% of their estimated income or 10% of their assets. So those are your biggest differences. But as far as the way that the two funds are managed within our organization, they are managed the same. They both have 75% of their fund balance in the loans we originate, and then also 25% of their balance in the real estate in our local market. So those are your biggest differences. And then, of course, minimums are different.
I was going to say the minimum was probably a big.
It's a
difference as
huge
well.
difference, and we went back and forth on this. I was not a proponent of setting a minimum at $1,000 because it is a small dollar amount. However, I have to say, a lot of people really like that because even if they have more than 1,000, I mean, this is a relationship, right?
Yep.
I tell people, yes, you're investing in the fund and the types of yields, but more than anything, you're investing in our company and Secured Investment Corp. And that is the type of relationship that takes time. And so a lot of people like the fact that they can start with $1,000, maybe wait, a quarter or two, see how it's working for them. And they typically come back and invest more. And then, for your people that really have small dollar balances, like small IRAs or really old 401ks, that's a really good opportunity to get those types of accounts that are more, typically smaller balances to work. So our minimum on that fund is $1,000, where the other one is $50,000.
Yeah, 50. Now, I think you hit the nail on the head when you said trust. I mean, one of the things when you're a fund manager and you've done it any length of time, you realize you are not selling a pref plus a split above that pref to people. You are selling yourself and your track record. You're selling that trust factor. So, and you all have been doing this for how long? You said 10 years?
We've managed funds for 10 years. Yeah, we've had 3 funds. Our first fund was written as a 5-year fund. So technically we had to wind it down after 5 years. And so what we did was we opened up our second fund before that fund wound down. So a lot of the people that were in
over here.
Yep. They just rolled over into the second fund. And so that was a good opportunity for them. But, I tell people you're investing in us and our team and the team that we've, put together here, which I'd like to take all the credit for it and say it's me, but it's not. I mean, we have a massive team behind us, from an acquisition team to an origination team, underwriting, servicing, accounting. I mean, it takes a tribe to run these funds. And, I think that's important to understand.
Yeah, absolutely. And, that's one of the things that it's one of like the tenets that we live by here is we do what's best for our investors, even to our own detriment. And we have the battle scars to prove it.
Yep.
And I know for a fact that you and Lee Arnold share that exact same sentiment.
Well, and that's why we align ourselves with people like you. We want to be associating ourselves with good operators. And as well as I do, if you weren't doing that, you would not have a fund anymore. And it doesn't always go as planned. It's not a perfect, formula, but if you have the right team behind you to react and pivot when these challenges come up, you will be a successful fund manager, and you will be able to continue to give those yields. But being open and transparent with fund members and investors is also really important. It's something I preach to my team. It's like, hey, I don't care if it's good or bad news. You have to be transparent with them. And I can't tell you one investor that's not understanding when there has been a challenge, but when you start not communicating, not being transparent, that's when you're going to be in some big problems. So
when you have the perspective from the lending side, when a borrower does that, I mean, where does your mind immediately go when
right.
a borrower ghosts you or goes dark?
Yeah.
We all think the worst. I mean,
Yeah.
that's just human nature.
Yep. Yeah. No, we're on the same wavelength as you guys.
Gotcha. So is your Reg A plus fund, is it open ended or does it have an end date?
It is open ended.
Okay.
Yep, it's open ended. It's got a $10 million cap. So once we hit that, then as a fund management team, we'll decide what we're going to do next. We can extend it, but right now it's wide open. It's a pretty easy process too. The nice thing about our Regulation A fund is that it's an online platform, which I think is great because I don't know about you. I don't even go into stores anymore. I would so much prefer to do everything on, which I don't know if that's a good thing or a bad thing. At least to
Yeah.
spend money, I had to physically go somewhere. Now it's like, oh, well, let's get on the internet. But the investment process is really easy. It's actually on an online platform. And what a lot of our clients do is they'll put it in growth mode, meaning that
Mhm.
they will take their earnings and they will reinvest them. And the online platform is really nice for that because they can actually log on there and they can see, oh, great, I earned 9% last month. That's an annualized yield, but
Sure.
they can see their reinvestments going into there and they can keep track of that. They can even go add additional contributions on that online platform. So I really like that. We're trying to transition the other fund over to that, but we've been so old school, DocuSign, here's your sub agreement.
Yep.
But Fund 3 is very easy to navigate through.
And what's that website for that? If someone wants to reach out and get more information, what is that website?
So they can go to securedinvestmentcorp.com. No plural in there. Securedinvestmentcorp.com. They can even schedule an appointment with myself and my team members if they want to talk more about it. I get a lot of questions like, you mentioned IRAs or 401ks. I've got my IRA with my credit union. Just for clarification, we're not a custodian. But what I can do is give you, and you guys probably do this for your clients, is you figure out real quick who are good custodians and who are not as great. And so I think it's helpful to help our clients, hey, here's a company you can call. They're going to advise you and help you get that money rolled over. Or like old 401ks, that's really common too. I have people every day call. I've got like 10 grand in mine. I don't think I ever did anything with it. They can roll those over. So my point is you can go to the website, you can schedule an appointment with us, or if you're just ready to get more information and move forward, you're just going to click right on Circle of Wealth Fund 3 and you can walk through the process. It probably takes literally 10 minutes to walk through it. So it's pretty quick and easy.
Oh, that's great. Now you touched on compound interest when Heather said that you can reinvest. Basically, you're taking your original principal and whatever you earn on it, you're compounding it back, and then that becomes your new principal amount at which earns interest as well. And I consider that the eighth wonder of the world.
I know.
Compound interest, if you taken advantage of it's infinite returns.
Yeah. And it really juices your yields. I mean, I ran a couple of calculations for a client the other day because they were not sure. They just wanted to get their earnings paid out. I said, well, here, do the math. And it was almost 0.5% more if they were to just reinvest their earnings, and everybody's in a different stage in their life, right? You may have millennials that are just getting started and, which is great. Like, I wish I would have started this in my 20s. Like, where was this? How come nobody told me about this? But for that type of a client that doesn't need the cash flow, reinvesting your earnings and putting in growth mode is the only way to go, especially with IRAs, because those custodians are so fee heavy. You have monies going back and forth and they're charging you transaction fees.
Yep.
Or, I deal with a lot of people that are retired. They sold their practice or their business, or, they're looking to replace their income. Then they're obviously looking more on the cash flow side of things. And that's an option too. I mean, you can get on Fund 3, which is the Regulation A plus fund. Earnings are calculated every month and paid out. On the Accredited Investor Fund, that's on a quarterly basis, but either fund has the options to reinvest. So it really just depends. And the other really neat thing is you can change it. So maybe you set it up now and you don't need cash flow, but in a year or two, you want to plan for the future. You can always switch it. It's very easy to do.
I mean, honestly, you need to think of it as, like putting your money into a fund, especially an open-ended one, is a retirement account. So it's the same thing. You want to build it in the early years. You want to build it up, and then you can use it as a distribution later down the road. I mean, these are the things that a lot of people don't get taught. We don't teach people how to use, and I'll use air quotes for it, alternative investing or alternative assets to subsidize their living, and it is fantastic. I mean,
Oh yeah.
like I just left the Collective Genius, and I mean, I was telling someone, I forget who it was, but I was like, I might be the poorest person in that room. If I'm not, I'm definitely like top, one of the three poorest people in that room. And I love it because everyone there is utilizing real estate to make a difference in their lives and their communities. And it's not a secret. Everyone can do it. And
I know.
funds are a fantastic way to diversify your risk and really get in the action.
Well, and you're not hands-on. You're not dealing with tenants and toilets and rehabbing houses. I've done both. I'm just here to tell everybody it is not as glamorous as it looks on TV. I was like, what the heck? I thought this was supposed to be like Chip and Joanna. My husband and I almost got a divorce. We made great money, but I don't ever want to do it again. And and then the other thing is there's lots of options with trust deeds and buying paper, and we sell tons of paper. But I am very transparent with our investors, especially new people. It's like, here's the deal. You want to buy a trust deed? I will sell you a trust deed, but I want you to understand exactly what you're getting into, because people don't tell them, hey, there's no guarantee that guy's going to pay. And if he doesn't pay, I'm going to guarantee you're going to have to start foreclosure. Foreclosure costs money. You don't have the cash flow coming in. And for some people, like honestly, buying trust deeds through your IRA is a great opportunity, because if you foreclose and take that property back and sell it, all that profit goes back into your IRA tax deferred. So you just have to look at your strategy and how active you want to be. I mean, I work with so many people that are just professionals. They have full-time jobs. They're like, I don't want the headache. I don't want servicing calling me, telling me they didn't pay. But then on the other side of it, I have people that really like that. So that's what's nice about the funds, is because it is the same asset. It's the same thing as the trust deeds. It's just we're managing it and we're doing all the heavy lifting for them, and they don't have the headache of it.
And it's not just one trust deed; it's hundreds of them.
Yep.
Like you touched on it. Yeah, if someone doesn't pay, you don't feel that
It's
in
a
the
lot
fund.
less painful. Yeah.
Yeah, you don't feel it. You might go from you might lose 1 basis point or 2 basis points on your potential yield. If someone doesn't pay with a trust deed, you lose all of it.
Yeah.
Like it's not there. So yeah, I mean, that's the same thing. Some people want to be active. They like playing the game, and that's great.
Yeah.
But a fund is a great way to sit back and let someone who you trust run the show and do it well and make you money. It's a great way to do that.
Well, the other thing is you don't have undeployed capital either.
Exactly. You're not getting it back, and then the
worst time is in an investor's life is when they get paid back, because they're like, oh my God, I got to find somewhere else to put this. And you and I have done deals together. It takes time. It may take a week or two that money's sitting there undeployed, where in a fund environment like your guys's and ours, that money's just constantly out there working, and you don't have that. So that's another big selling point with a lot of our clients is it's great that borrowers pay off, but then it's a big hassle when you got to find a new trust deed. Your money has to go back to your IRA custodian. Then we have to request it back. That could be a 2-3 week turnaround.
Yeah, and there's no, like, if one pays off, there's no guarantee that you have one available at that time to sell them. I mean, this, like the way a fund works, we either have too many deals and not enough money, or the complete opposite. So, if you hit us at the wrong time, we don't have anything to sell you.
Yeah.
So I did want to ask you on, you said 25% is real estate owned inside the fund. So do you all offer some like a depreciation benefit to your investors? How does that work?
No, that's a good question. And I've had a lot of people recently ask me that. Right now, and historically, no, because the assets we buy are so short-term in nature. I mean, our focus has been buying single family 1 to 4 units and fixing and flipping them, because the whole business model of our fund is just that cash flow. It's just constantly turning over. So right now it does not offer any benefit of depreciation because we don't hold the assets long enough. We might, sometime in the future do a syndication or create another fund where we hold assets where there's that opportunity. Because I have had a lot of people ask, it's funny. You have some investors are like, I want the highest yields I can. And then you've got high net worth people that are like, no, you're paying me too much. My yields are too high. And I'm going, okay,
Yep.
that shouldn't be so again, it kind of goes back to the individual's appetite, their tax situation, their strategy. Right now, our funds do not offer any depreciation, and I don't see that in the near future. If we were able to offer that, it's probably going to be in another fund environment or a syndication of some kind.
Yeah, I mean, you normally see it with real estate that you hold for more than a year. Yeah, you're right. With the short term stuff, it would be too onerous, and honestly, it wouldn't be that much depreciation.
But here's the thing: markets are shifting. It's still a hot market here, but it's not what it was 3 months ago. I can tell you that. We have hard winters here too, so we have seen our market cool off. It's still good. I mean, we're not seeing values go down. Things are taking a little longer to sell, but it was also the end of summer. Everybody's taking vacations, trying to get kids back in school. I think, historically things start to pick up again in September. If we do see values start to decline, because our values here are just insane. Like, we just sold our primary residence and I was like, I couldn't even believe what we sold it for.
I can't remember if it was Utah or Idaho, but one of the two saw the highest appreciation for real estate.
It's Idaho.
It's Idaho.
Mainly the Boise. Yeah, mainly Boise market, which is farther south than us. But Coeur d'Alene, Idaho is a resort town that everybody in the world has heard about. It was in the Wall Street Journal as the #1 place to move. And we're all like, oh my God, no, don't tell people that. But the point is that we might start to hold some rentals, if we see markets decline and just cash flowing, because when values go up that high and then they start to drop, there's also, so what's happened here is a lot of people that are from here originally have started selling their homes, and now they have nowhere to go. Yeah. Because prices are so high. They made a ton of money, but they can't buy it. They can't replace what they sold. Now there's this huge demand for rental markets too. Yep. So, as a fund management team, that's the neat thing, is we can pivot. Like, yeah, so what, we, for the last 7 years have fixed and flipped, and that's been a really good juice to our yield. But it's not to say that we might not find that, holding some rentals and cash flowing those might be more beneficial and profitable for the fund. But again, they'll always be single family 1 to 4 units.
Absolutely. Yeah. That what markets, or what asset class to be in. But yeah, if you fix and flip and you're getting a 14 to 16% return, I mean, with good levels, a low enough buy-in cost, good levels of rent and depreciation, you can probably achieve close to that, if not hit that as well. So
right.
Yeah, both are good strategies for sure.
Mm-hmm.
Yeah.
Well, yeah, it's exciting times to be in.
Absolutely. Can we throw her website up there again? Secured Investment. Thank you very much. So guys, if you want to get in contact with Heather or someone from her team, talk about a couple funds that they have. I have, through our company here at Carolina Capital, we have bought loans from Heather. We have done deals with Heather. I couldn't vouch for her any more than doing business with her. So thank you very much, Heather, for your time and your expertise on all this.
Yeah, I appreciate it. Those are really kind words, and we feel the same way about you guys. We've worked together for a really long time, and I love the fact that we kind of do the same thing, but don't feel like we're in competition with each other. And, I think it's really boils down to just taking care of the client and finding what's the best product for them, whether that's with you or us or someone else. So we'd love to talk with anybody more if they have questions. I have a lot of clients that love the Regulation A+ fund for their kids, like young adults that are just getting started, because it is such a low minimum. So that's something to kind of think about too on that one.
Excellent. Yep. Excellent. All right, guys. Well, thanks for watching. We are Carolina Capital Management. That is carolinahardmoney.com. Check out our website. And if you would like to borrow money, hit the borrower tab. If you would like to be a passive investor in our fund and you're accredited, hit the investor tab. Also, don't forget to subscribe, like, share, hit the bell, all those fun things. I still don't know what hit the bell is.
Yeah, what is that?
I don't know. Someone tried to
You
explain
need to
it to me.
ask Bill.
I should, yeah. Like, I don't know what it is, but I think it has something to do with YouTube, maybe. I don't know. But yeah, so thanks again for watching, and we'll see you next week.